Hello friends, Indian Bank Nifty touches all-time high and most of the banking stocks, either is it a large cap, mid cap or small cap, are literally near to the all-time high or already touch all-time high. So at this scenario, what should as a retail investor should do? Shall we buy more stock? Shall we hold with it or shall we sell? So today I am going to talk about Indian banking sector in detail and I am going to give you answer what should you do from here, and also I'm going to talk about one particular stock which can create a great wealth over a period of time. So stay tuned till the end. So friends, my name is Tapan Doshi. I welcome you all. So let's start with the banking sector. So friends, talking about Indian banking sector, the quarter was quite solid on all the operational metrics. So last September, basically quarterly results were very good for most of the banking stocks, and that shows a confidence with which the banking sector is moving ahead. Lot many things they are keeping behind on lot many parameters. They have progressed very well, like NPA, the loan growth, and also the rising interest rate scenario is helping all the banks to post a very good result. So talking about Indian banking sector, if we see, the loan growth was healthy at almost 18% year-over-year growth. Now this is a very healthy growth rate. Currently, when the market is in a tough position across the world, if you talk about USA, Europe, all these guys are literally on the recession, and then also Indian banking sector is performing well, and overall if you talk about the Indian stock market is performing well. So that shows that yes, Indian economy is doing quite well. Even the China, because of the COVID crisis, their growth is slowing down. Here India has an added advantage, and that advantage you can see, and it is reflected in the banking sector also. And whenever there is a rising interest rate scenario across the world, banking sector are beneficials. That's the trend. If you see a history of Indian stock market or any stock market across the world, rising interest rate is a like a no boom period for any banking sector, because there actually net interest margin can increase, so NIM can increase, and as a result it is always benefit. Now talking about, as I told you, in India, net interest margin expanded for most of the players, that is most of the banks, led by interest rate transmission. Now understand why net interest margin is increasing. See, what is the one of the main source of banking sector to earn money? That is lending. Okay, so when they lend, that is basically housing loan, corporate loan, or any type of other loans, they get interest basically from the borrower, correct? Now normally, suppose, now let me take an hypothetical example. Suppose they lend at the rate of 10%, okay, 9 to 10%, but when they have to give interest to the depositor, so the depositor like us, individual retailer, put a deposit in the bank, so they have to give interest. So they suppose give interest at around 6.5 to 7% there. So difference between this 10%, 6.5, 7%, that is around 3%, is the net interest margin of a bank on a layman language. Now normally what happens whenever there is a rising rate scenario, bank, what they do, they increase the lending rate on the same day, the day the RBI proposes the policy, on the same day they increase the repo. So basically the repo rate is increased by 50 basis point if the RBI says, then on the same day they increase the lending rate by 0.50 basis point. So that is why their lending rate increases, so they start getting income on the day earners. But when it comes to deposit interest rate, when they have to give back to the depositor, they increase that deposit rate very slowly. So actually that is, and again, if there is a repo rate increase of 50 basis point, they do not increase by 50 basis point the deposit rate, they may increase by 25 or 30 basis point. So you can understand, in a rising interest rate scenario, their lending rate goes up, but the deposit rate not goes up in the same rate, in the same pace. As a result, the difference goes extended, and as a result the bank earn much more, and that is why high rising interest rate is beneficial to them. So as a result, as you can see, the net interest margin expanded for most of the players, led by interest rate transmission. Again, fewer concern on treasury. Now why this point is important? See, understand guys, now we are in a very shabby scenario across the world, and you know that US dollar rate is actually going up, and even US dollar index is also going up. and as a result, no, there is always a currency fluctuation. But yes, now the concerns of related to currency fluctuation is going down, and that is a plus point for any banking stocks. Again, if you talk about provisions, actually provision has declined steadily over the years. The reason is simple, that guys, if you take the last 15 or 20 years of history, overall Indian banking sector, the NPA has started going down. If you talk about almost 7 years back or 5 years back, no, Indian banking sector was in a mess, and mostly because of the public sector banks, which has literally, given loans to all the corporates without thinking. And there are many other cases, like that Yes Bank happened, DHFL happened, then Mallaya, okay, even Anil Ambani's companies, all these frauds happened, and as a result, what happened, there was a NPA pile up across the public sector bank and many of the private banks. Now slowly and gradually these things is decreasing, and that is the one of the biggest positive for banking industry. Now the even you can understand, see, when initially when this thing start, no, it is always shabby. For example, let us talk about GST launched almost 5 to 6 years back, and it was so shabby at that time. No, people were struggling and all that. Now you can see GST collection is more than 1.5 lakh crore every month. Now that is the thing, even for the banking sectors, correct? As and when the new provisions are coming, RBI is making more stricter and stricter to give loans to this type of corporates. The due diligence is more happening. It is very much impactful for the banks also, because in a way they are being safeguarded by all these frauds and everything. And public sector bank, actually there is a U-turn, you can say one of the U-turn, because the reason is the way they were lending earlier, now they are not following the same process. So that is one of the biggest positive. Also, if you talk about as I told you, the gross NPL, that is nothing but non-performing loans, okay, is at the 7-year low, and net NPL is at a decade low. So as I told you, is at a currently whatever NPA is there, it is almost 7-year low compared to the earlier NPA figures. Even the net NPL at a decade is in a decade is a low. So that shows that yes, the way the actually asset quality has improved is commendable. Again, ROE are moving closer to the normalized level for the sector. Return on equity are actually reaching at a normalized level. That is one of the biggest positive for the banking sector, because understand, it's very simple. If there is a decrease in NPA, it will have a direct impact in return on equity. And then what is return of equity? Return of equity is nothing, whatever earnings they are getting through the equity shoulders, correct? And if even a single NPA, that suppose there is a 500 crore NPA also, it will wipe off 500 crore rupees directly from the net profit. So you can understand such a big impact is there for an NPA basically on a particular banking stock. So that is why a reduction in NPA is one of the biggest positive, and as a result the ROE is expanding for most of the bank, mostly for the private banks, but yes, public sector bank also, it is slowly and gradually improving. Again, good confidence in the recovery of asset quality metrics. Now here IBC is playing a big role. IB is nothing but Insolvency Bankruptcy Board of India. Now any basically asset, if goes bankrupt, that is any companies goes to bankrupt, then they have to surrender to IBC, and then IBC will try to take out as much money possible from that by selling the asset of that company. Now the IBC is playing a big role, and this is making a bigger difference for any banks, because there is a chance of recovery through IBC. Now few years back this IBC code was actually implemented, now it is giving a very fruitful result. So that is one of a very positive thing happened in a banking sector. Again, most of the stock prices has moved up sharply, but we expect a further upside in this bank. So I am going to talk in detail about that, but yes, this is not the top, because even I think from next 3 years 2 years, 3 years, Indian banking sector is going to perform a lot. I think this is one of the golden period of Indian banking sector, which is happening, this high rising interest rate scenario, and there are so many things happening together for Indian banking sector. Like main is the NPA coming down, the books are clean, and all that stuff is playing a big role for Indian banking sector. Now talking further, total of 257 IBC cases were admitted in Q2 financial year 23 and 332 in Q1 financial 23. With the early run rate is still below 2000 cases of financial year 2020. Now this is what I am telling you guys. Earlier, if you take few years back, there were so many IBC cases there lying with IBC, which was not been resolved, but now it's slowly and gradually getting decreased, and also the number of cases which has been submitted to the IBC is also going down. Now that is also one of the very positive thing happening for an Indian banking sector. Another, the total number of fresh cases not so high, and mostly from smaller mid-cap corporate loans. Now that is what it is shown, that now basically the big default is not happening. Now that is one of the biggest positive, and the total number of fresh cases which is coming in the market is quite few compared to what it was there earlier. As a result of what is happening, there is a confidence coming in the banking sector that yes, in future the earning can sustain and banks may deliver a good result. Now we do not expect any near to medium term stress as well, considering that the balance sheet of corporate India appears to be quite strong. The same ring, as I told you, that because of the strong balance sheet and the slowly and gradually the way the balance sheet is improving, we do not see a big stress coming in Indian banking sector. If you talk about, most bank has reported healthy credit growth. Those with a high share of floating rate loan portfolio have reported modest margin expansion as well. So as a result, see, understand, the NPA is going down, and as the economy is getting stronger and stronger after COVID, there is a healthy credit growth happening in banking sector, and there is a high share of floating rate portfolio. Now what is high share of floating rate portfolio? Basically, now most of the 95% or more the loan is there on the floating rate. There are two type of loans available in the market. One is fixed rate and another is floating rate. Now normally bank give only floating rate. Now as the interest rates start going up, because of that the floating rate, the rate of lending also goes up, and as a result the banking are getting benefited. As a result, what is happening, the margin expansion is happening slowly and gradually. Another thing is the resultant strong operating performance has probably provided a tailwind to the stock. Now as the NIM goes up and up, from here also stock get much more better tailwind. The result is simple, the profitability of the bank goes up, it will directly impact any stock performance, correct? Again, the interest rate continued to their upward trajectory, resulting in the margin expansion over the past few years. As and when the interest rate goes up, now RBI is going to increase interest rate in coming months also, because still they have to bring their inflation, Indian inflation at a between, you can say that 3 to 5%. That is their main mission, and this is why main mandate to the RBI given by the government, they have to bring between 2 to 5%. Currently it is around 7% odd, so they have to bring it down. As a result, they are going to increase the interest rate. So if they start increasing the interest rate from here also, no, of course banking sector will be benefited a lot. So that is a thing. Now guys, this was all about banking sector. You can see so many tailwinds are already there in the banking sector, which is having a very good impact on the banking sector performance. Now let us talk about one stock which I recommend to you, a very safe stock, and which has literally turned around over the years, in last few years. So this is a large cap stock, and the stock which I am going to talk about is ICICI Bank. So ICICI Bank is my recommendation, and let me tell you why I recommending ICICI Bank even at a current level. So when I talk about ICICI Bank, no, ICICI Bank has literally turned around in last few years. Earlier, few years back, no, its performance was not so great, and because of many other reasons, and of course one of the main reason was the corporate loans which they were giving. there was a new board formed, and the new board has done a commendable job in bringing ICICI Bank back to the growing path. Okay, so let me talk about ICICI Bank here. So if we, as I told you, talking about the retail loan and corporate loan. Okay, now if you see this figure, guys, if you see here, the retail loan was in 2009 only 49%. However, after that it reached to 57% 2018, and now in financial year 23 it is around 68 to 69%. So over the years the retail loan participation has gone up in India, in basically ICICI loan portfolio. That is the biggest positive, because for ICICI Bank the biggest culprit was nothing but corporate loan. So if you talk about corporate loan, at one time, which was on 2013, it was 33%. And you know that after that they gradually started going down, and now it is around 22%. Even you know that Videocon saga happened, and because of that at that time CMD resigned, and as a result what happened, that from that day onwards they started bringing down their corporate loan, and that was one of the biggest positive for the ICICI Bank. Even if we talk about international loans, okay, let me talk about SME. SME is almost steady, around 5% odd. However, international loan from 25%, that is in 2009, it has gone down to 4%. So if you see now 69% is there for the retail loan, and this retail loan is providing the biggest cushion, because in retail loan you do not have a big defaults. Okay, because if one corporate default, no, you can have your lending, literally loan portfolio get vanished. The thing is, there is a big NPA coming if the big corporate default. And however, retail, whenever you give loan to retail, no, the chances are less, and these guys are doing us actually surviving on their salaries and everything. Mostly they are consistent paying their interest and everything, and also installment. So that is why retail is quite safe for a bank compared to corporate loan. And now that is a big shift from corporate loan to retail loan, and as a result ICICI Bank is performing in last few years very well. Now talking about overall loan performance, if you see overall loan is around more than around 24% basically, and over the last few years it is steadily increasing. Retail loan has increased, the actually is having a very good pace. If you see, it is around more than 24% growth rate is there in the retail loan, that you can see from the last slide I have shown you, that yes, it is slowly and gradually it is increasing. Now talking about branches and cost of funds, now this is very very important, guys. If you see here I have compared ICICI Bank with HDFC Bank, Axis Bank, IndusInd Bank. Now if you talk about branches, no, it is more than 5,300 branches. Now currently around 2020 it was around 5,300, now it is reached to 5,600. If you talk about 2018, it was around 4,800 branches. Now if you talk about ICICI Bank, it is literally near to the HDFC Bank branches. So overall, if you see, ICICI Bank is growing very well. If you talk about branches level also, they are expanding their business across India. If we talk cost of funds is also around 3.8, which is similar to HDFC Bank, and which is a very good metrics. If you talk about Axis Bank and IndusInd Bank, like IndusInd Bank it is 5, and for Axis Bank it is 4. So you can say even that cost of funds also, they are having a very very good metrics. Now let's talk about overall NPA. Now this is one of the most important slide. NPA was the only thing which is why ICICI Bank was not able to perform all year. And if you can see here in 2018, okay, the gross NPA was 8.8%. From 8.8% they brought down to almost 3.2, 3.4% this year. So there is a tectonical shift from the earlier figure which was there in 2018. So in last 3 to 4 years, you can see they have actually literally brought their gross NPA at a much lower level, and that is why we should give praise to the board the way they have functioned. Even if you talk about net NPA was 5.4%, it has brought down to 0.7 to 0.6%. Now, if you talk about gross NPA, see non-retail, if you see the non-retail was 20.1, okay, percentage, which is brought down to 6.6. However, retail NPA is around 1.6 in 2018. Now also it is around 1.9. So as I told you, the retail loan is not so dangerous than the corporate loan. If you see the corporate loan, their non-retail section, that has brought down the complete NPA. Okay, so the less they are giving loan to corporate and the more they are addressing the way of giving loan and the you can say audits and everything. This is why their NPA is decreasing. Now talking about PCR. Now what is PCR? Now PCI is nothing but provision coverage ratios. Now so whatever NPA, prospective NPA is there in the books, is the bank is able to cover that in a provision or not. So if you talk about 2018, in 2018 it was around 48.4%. So out of the total loan what was there earlier in 2018, 48.4% actually they were able to actually make a provision of that. However, in financial year 23 they have made to around 80 to 81%. Now that is commendable job. The reason is simple. Now most of their NPA is been covered through a provision. So there is no big shock coming in coming quarters, in coming year, and that is a big relief for any bank. And that is what normally analysts sees, that is there any shock coming in future. Because if there is a big shock coming, then they have to address that thing, and that is why they may bring down their book value, their PE ratio and all that. And that is why the bank will not get that excess premium. Now if you talk about currently, ICICI Bank is having much more premium than even a HDFC Bank. Why? Because ICICI Bank has performed in last few years very well. So let us now talk about overall key metrics. Now this is very important, guys. Now first let us talk about net interest margin. Now if you see in 2018 the net interest margin was 5.9%, then 2019 17.3, 2020 23.1, 21 17, now 2022 21.7 and 23 22.7% growth rate. Now this is very good growth rate. NII is slowly and gradually increasing, the growth rate is increasing. That means more and more people they are giving loan, but in a better way, with a due diligence, with a better audit, and they are giving a loan who are capable to pay back, correct? So that is the thing. So NII is growing very well. Even if you talk about PAT is also from 2010 162, it has gone to 233. Now this is all in billions, and in 2023 estimated is 316 billion. So EPS growth, if you talk about, it is around 44%. In 2022 and 23 it is 35%. It's a very good growth. However, EPS growth, if you can see here in 2018 2099 was on a negative side. So what it shows, yes, the slowly and gradually ICICI coming back to its normal life, and it is coming out strongly, and that is what is showing in the profitability. Now if you talk about P ratio also going down. See, it's simple reason, guys. If your EPS is increasing, of course P ratio will go down, but if EPS is not increasing and the price only goes up, P ratio will always be there in an elevated level. So here the P ratio is basically market price is also slowly increasing, but along with that the EPS is also increasing. As a result, P ratio is coming down, and that is the one of the biggest positive. Even if you talk about book value per share, if you see book value per share, the book value is around 2000 in 2010 is 213, 2022 245, and 2023 it is 281. So slowly and gradually even the book value is increasing. Now that is a very positive thing. Book value will, when it will increase, when the profitability goes up, when the balance sheet goes stronger, then only the book value goes up. Otherwise, it may not increase. So that is the reason why book value is increasing. Now, talking about price to book value, which is one of the important factor to value any stock. Okay, value any stock. Now, if you talk about price to book value is nothing but currently it is 4.3 in 2021. 2022 is 3.7 and in 2020 the estimate is around 2.2. Now this is a very good figure, guys. So if you see, price to book value is coming now. If it comes now, that means that yes, price is not overestimated here. Okay, so price is not on a higher side because it is coming up down. If the price to book value is on goes on a upward trend, then you have to be no cognizant with the whether something is going wrong in the company or not. But here it is coming down, so that is one of an important factor, guys. So guys, this was all about the ICICI Bank, but what it shows that yes, their NII is performing very well, their growth is going up, EPS is going up, price to book value is coming lower and lower, P ratio is stable. So from here also I think ICICI Bank will play a big role in the Indian banking industry, and there is a good growth perspective of ICICI Bank from here also. So on a stock price perspective also, you can easily see 15 to 20% growth rate in next few years also, and that is what I think about that stock, and I do recommend everyone to buy ICICI Bank at every dip, even at a current level. So guys, this was all about ICICI Bank and the banking sector for today. Hope you like this video. If you like this video, just click the subscribe button and enroll to my channel. And I will see you soon in the next video. Thank you. Bye bye.